Okay, folks, welcome to Sunday Night Futures Live. And what we're going to be talking about tonight is obviously the futures, but we're also going to be talking about some real serious headlines that came out over the weekend. Russia, the attack there, and the Red Sea, major problem. So we have some headline risk in the news. I'm looking at the S&P 500 now, the E-minis. We're up, but they're fighting to gain traction. So obviously, it's still very early, thin volume. So we will go over all of these in a moment. We'll talk about market valuation. We'll talk about earnings coming out this week as well. So let's begin with the E-minis. This is a 5-minute chart. We have a bit of a squeeze firing off here. I just want to know if we get a higher high. Or do we break the 21 period EMA? Ugh, I always do that. I always do that. Okay, let's take a quick peek at the NQ. This is the NASDAQ 100 futures version of the triple Qs. And we are up 0.13%, similar as to what we saw in the E-minis. We're struggling to hold these gains. Okay. Where's the rut? Russell 2000, where are you? Here you are. Russell 2000, while it's not as high or not in percentage terms better than the triple Qs, technically it looks better. I mean, we're still positive relative to the open than the E-minis and the NQ. So what this leads me to want to do is to take a look at yields, and we'll do that in a moment. We're about to make new session higher highs here. So my guess is that we have yields which are pulling back. Let's check in with it. They're not. Well, they are pulling back, but yields are up fractionally. Here's the mid caps. We began bull operations on mid caps and small caps last week. Dollar cost averaging into these names. Historically, 6 months after the first rate cut by the Federal Reserve, these names tend to outperform. So what we're doing is we're building up that portfolio now, getting ready for the rate cut. We got to concern ourselves with why is the Federal Reserve cutting rates and the market reaction to that event. Usually it's down. So we don't want to go buying those stocks now in anticipation of a rally 6 months after the first rate cut. Doesn't make sense because we're worried about that market swoon. So dollar cost averaging at current. And if we get that swoon in the market, then we'll be aggressive buyers of the mid and small caps. All right, so that's equities. What is the Dow doing? Dow is Up fractionally. We're into our second 5-minute bar here, and we are moving into the wick of the prior bar. That's not bullish. Let's just check back in with the NQ really, or, Nasdaq. Excuse me, the S&P 500 will do. Not much happening here. Looking at currencies, the US dollar closed out the week last week very, very strong. A very strong week. Now, the dollar at current is up, but off of its highs, not looking all that bullish. Checking in with the euro yen. Euro down, but coming off of its lows. They have the elections over in, I know France is in 1 week, and they're probably going to have a bunch of other elections over there. So you're probably going to see a little bit of turmoil in the euro market, strengthen the dollar until those elections are in the books. Yen, this thing got destroyed last week. New on the FXY, new all-time lows on the FXY. They're bouncing at current. Let's take a pause here. Let's say hello to folks. Oh, a lot of comments. Pete, welcome. Larry, let's watch XLE if it breaks through 93 and sticks. It's going high. Yeah, I mean, we're going to go to oil in a second. The Larry's right. We have oil stocks are looking very, very good. Oil in general on a weekly time frame is at the apex of a very, very long-term, multi-year wedge formation. A resolution to the upside means that it's probably going to take the energy stocks along with them. So buckle up. And you want to talk about inflation? We get a breakout on a yearly on a yearly chart on oil. That is inflation, textbook inflation. Talon, thank you, sir. I appreciate that. Franklin, same to you. Same to you. Yeah, it was pretty good. It was pretty good. I'm getting ready for some family coming into town. So pretty busy. Joel, hey, Joel. Sean, welcome. Very tight crew. Very tight crew. What is your on region? Is that a symbol? Thoughts on region? I think that's Regeneron, right? We're going to be going over GOOGL, Tesla, Palo Alto Networks. Those are my top 3 picks for the new trading week. So we'll go over those charts. We'll go over REGN as well. All right, Jody, welcome. Okay, let's continue on here. Let's go to oil. Light sweet crude. Very tight Bollinger Band setup here. Let's take a look at the weekly chart. And you can see that we have a bullish uptrend and we have broken out. There's the breakout point, new uptrend. We closed out the week above the 21 period exponential moving average. Very, very bullish. Very, very bullish. This week, the 5 period, I think this is the 5 period or the 8 period in white. No, it's a 20 period. But I had the 5 period up. Anyway, the moving average is looking rock solid. Oil looks like it wants to go up. Back to the 5-minute view. Let's take a look at nat gas. Ooh, nat gas gapping down here. It's so volatile. It's not even a percentage point, so not horrible gap. This may be a buying opportunity if we get a bullish candlestick here on a 30-minute view. So we'll keep an eye out for nat gas, especially if it takes out recent highs. Okay, so we did energy. Let's just take a quick pick at RBOB. Gasoline prices, they rallied last week along with oil. Where is it? I gotta write down these symbols. Oh, here it is. I just saw it. Here it is. RB. That should be easy enough to remember. So here's what concerns me is that as goes oil, generally so goes the distillate. So here you have oil moving up higher, multi-week rally. You also have gasoline moving up higher. This is all inflationary. And people may say, hey, Bob, they back out food and energy out of the inflation data. Okay, but still, the analogy I use, if you're a tire manufacturer, you're included in the headline number or the core number. So what goes into what are your input costs? Well, petroleum products are in tire manufacturing. So it's going to be reflected in the distillates that are input costs from manufacturers at the core CPI, at the core PPI, at the core PCE, all that stuff. So energy is extremely important for the inflation numbers. Let's take a look at gold. Gold did. I was very disappointed. I was bullish on Thursday, bearish on Friday. Bearish reversal bar on the week last week. Let's go to the 5-minute chart. See how we're performing here. Not great. We're up, but this is a weak setup. Let's check out silver. Silver now down 1/3 of a percentage point. Horrible closes on the week last week for both of these names. Taking a look at agriculture. Let's go weekly view to get the vibe of the trend. Corn breaking support. Soybeans still trending lower. So let's clear this all up here. Okay. So what we're looking for on soybeans is the potential for a higher low. Until we get a breakout, I am a seller of beans. The path of least resistance remains lower. And if we get a new weekly lower low, I may be throwing out a short position on soybeans. Now, wheat, from what I understand, got destroyed last week. And yeah, it did. Wow, look at this. So wheat under a tremendous amount of pressure. We remain in the downtrend channel. So at current, wheat is a short. Okay. What else do we have going on here? We have a position in palladium. That's gapping down. Copper. Copper, let's clear all this up. Copper may be bottoming out here. Very, very tight wedge formation. All right, we'll watch out for a breakout in copper. And the reason why we keep an eye on copper is that energy demand is set to explode over the course of the next several years. What do you need for these charging stations, et cetera? You need copper, a lot of it. Let's go back to comments. TZ Burton, welcome. Talent, Amazon, you got it. Of course, I have time for you. And I'm going to pause here for a moment. I've been doing a lot of thinking, analyzing of late of the business, the contrarian trader as a whole, and I'm going to be sending out. Members are going to get one survey. Non-members are on our email list. They'll be getting another survey. I'll probably pop in a survey into the live streams over the course of the next several weeks, because I'm going to be doing a big, big refresh of our services, of the website across the board. Possibly changing up the forum for our community, thinking about Mighty Wet Networks, or continuing on with Slack. But Slack has changed a little bit, the version that we're on. So a lot is happening here. So more to come over the course of the next couple of weeks. So if you do get an email for a survey, if you could take a moment, I'd really appreciate it. Take the survey, because I want to be able to provide services that not what I want to provide, but what you want. So that's what's important to me. So if you could complete that, expect it, I really appreciate it. And thank you for listening to me. RK, something comforting about the Sunday broadcast, even though I don't agree with the politics and the constant doom and gloom. All right, so it is a fair point. I don't talk a lot about politics anymore. I got back because I took, I'm big about taking feedback. I'm very, very receptive with constructive criticism. And I have tried to avoid the political third rail, if you will, and talk more about the impact of policies. Now, if it has to do with the stock market, it influences the stock market. Maybe you take it as an attack, but it's not an attack. I'm saying fact. This is what I believe is going to happen because of these political policies. So we can't ignore politics. What we can do is avoid taking sides. So I appreciate the feedback. Doom and gloom, I've worked on as well. As a matter of fact, I have a chart coming up in a little while about how stocks may, in fact, be cheap on a forward-looking basis. I don't believe that they are, but I do have a chart, and we want to report that as well. But thanks for the comment, RK. Talent Green Futures, Sailor Beware. Hey, Bob, last time I had a gut feeling it was AMC before all the meme stock hype. Now my gut is for GoPro. Well, let's check it out. Let's validate. Is that the symbol GoPro? I don't think I've ever looked at that chart. Dane. Hey, Bob, could you please look at we're going to do Palo Alto Networks is one of my favorite stocks going into the new trading week. So, yeah, we can go over that one, and we will do CrowdStrike as well. Okay, so let's get to it. Let's take a quick peek back at the futures and where they're at current. NASDAQ remains up and gaining some momentum here. We have not taken out the highs of the session yet. Volatility is down by a little more than a half percentage point, looking very weak here. Okay. 10-year still remains up, but off session lows. All right, let's get to it. All right. Okay. Going into the new trading week, we are going to have not much early on. Tomorrow, we get Fed heads. So what does that mean? In all probability, equity markets are going to be up tomorrow. Tuesday, consumer confidence, 10 a.m. report, and we get the Case-Shiller Home Price Index. I keep getting mixed reports about home prices declining, home prices expanding. I don't know. We'll see what the Case-Shiller report has to say. Wednesday, new home sales, not a big one. Thursday, initial jobless claims. We get that every single week. GDP second revision for Q1 comes out. Durable goods, that's a big, big number coming out on Thursday. So let's watch that one. They're expecting a negative number after having a positive number the prior month. Friday, we get PCE. That's the Federal Reserve's favorite inflation metric. So don't ignore it. It's very, very important. And we get a consumer sentiment report coming out. Oh, this is the final. It's a revision. So this is for, I'm confused here. Consumer confidence for May. Okay. Consumer sentiment. Consumer sentiment. Okay. Two different reports. Now I understand. Okay. Got confused there for a second. All right. So early on in the week, not much in terms of economic data. The bias will be to the upside for equities. In particular, I believe the S&P 500, in particular, not even just the S&P 500, more so the Dow Jones. Dow Jones had a strong week last week. S&P a little bit weak. Qs not that great. Semis completely overbought. Reversal week last week, along with the XLK. That's the technology sector. FedWatch tool going into the new trading week. All eyes remain on September. This is at 69% probability of an ease on Friday when I recorded the week ahead commentary. Now we're back down to 65%. Still a strong number, pretty stable. We've been here for a while now. So market participants are expecting a Fed ease. What could derail this? A lot. You get a durable goods number that is not negative as they're expecting, but positive. That will knock down that probability. If you get a breakout on oil on a weekly time frame above the upper band of resistance, traders are going to be looking at that. They know that that will impact forward-looking CPI, PPI, and PCE reports. If we get a hotter than expected PCE report, this number can get affected. So while it looks optimistic, we've been here before. Remember, at one point in time, we had an 80% probability of an ease for March. That was a long time ago. So let's not get lured into a false sense of security that the only way for rates to go right now are down. That is not the truth. So let's be very, very cautious of buying into this widely embraced expectation of the Federal Reserve. Schiller PE ratio. We're very, very expensive here. This is a trailing view, 35.58 in terms of a trailing PE multiple, and the Buffett indicator, we remain strongly overvalued, just shy of a 2 standard deviation overbought level. So this is, maybe doom and gloom to some, unless you're short. This is fact. No, we don't make it up here. Reporting fact. The last thing we want to do, we want to act more as a counterbalance to CNBC, Fox Business. All they want you to do is buy stocks. Why? A bull market begets advertisement. When a bear market hits, their advertising dollars dry up. They want a bull market. So they're going to ignore this. They're not going to talk about stocks being too expensive. And it really doesn't matter until it matters. Once the stock market begins to go into correction mode, then all of a sudden they have people come on and say, well, this stock market is strongly overvalued. You had to expect this. So right now, they're not going to talk about it until the market reacts. So let's just be aware of it. That's all. Now, this is the bullish chart that I mentioned earlier to RK. Actually, sorry, this is not the bullish chart. Earnings. We'll go to the other chart in a moment. We have Carnival coming out. That should be an interesting one. Carnival consumer discretionaries are breaking out. We went over Six Flags for Franklin on Thursday night. Even with the dismal news that came out about racism over Disney, it's accused racism in their promotion and hiring practices. Disney shares did not take it on the chin on Friday. They went up along with the XLY. Carnival is certainly in the consumer discretionary names. Are people opting now to stay closer to home because it's too expensive to travel overseas? Maybe. We'll see. FedEx reports. That's a transportation stock. Transports had a big reversal bar on the week last week. Wednesday, Micron, that stock's been hot. BlackBerry, that's a meme stock. What else do we have coming out this week? That's about it. Oh, Nike comes out, but who cares about Nike? Okay. Let's come back to this. Here we go. This is what I wanted to talk about. Ryan Detrick gets the props. So many are wondering why stocks are up 25% last year and another 15% this year. Forward-looking earnings expectations continue to move up. So a very, very powerful chart here. Does it support this multiple? We'll see. This is a projection, not a fact. So this is a projection. We're giving good news here to the bulls. All right, U.S. households, stock allocation as a percentage of financial assets hits a new record of 41.6% in Q1 of 2024. That's great. So that 41.6% of the population, they're able to digest the inflation numbers that are coming up because their assets are appreciating. They're not living paycheck to paycheck. Inflation is hurting the poor. The government, who creates inflation and pretends that they want to protect the poor, well, that inflation directly impacts the poor because they don't have assets. Think about this. Less than 50% of the population has any access or has any investments in stocks. Maybe they have it in real estate, but you need a roof over your head. It's not really an asset per se, unless you're going to downsize or sell and move into an apartment. So a lot of people out there are being burned by these inflation numbers. But it's kind of good to see that we have 41.6% participation in the equity markets. This is up 30.5 from 30.5% in 2020 and even higher than 2000 dot-com peak of 38.4. Since the 2008 financial crisis, household participation in stocks has more than doubled. Since then, the NASDAQ has rallied 1,738%, and the S&P is up 702%. Since September 23 alone, the NASDAQ and S&P 500 have seen 40% and 32% gains, respectively. So households are benefiting from historic runs in stocks. The problem is that the gap between the poor and the wealthier, that divide is getting ever wider. And it just welcomes in the welfare state, which the government loves because they have voters on a paycheck. So good news here. Now, a little bit of concern is that wrong chart, positive chart. Tech stocks saw a weekly inflow of $8.7 billion, the largest in history. This is a weekly and 4-week moving average. Very strange. When was this published? Because there was a reversal bar on XLK last week. Here's XLK. That's the technology ETF. We closed up, but we closed well off the highs. So this could be a contrarian indicator that you had a lot of bullishness, a lot of money moving into the tech sector, which has been in fuego. The problem is it's extremely extended. Now, as a contrarian, this to me is a sentiment indicator. The long side of this market is an extremely crowded trade. And this post here shows you the level of short interest in the SPY and the QQQ. QQQ in light blue, SPY in black. And short interest is extremely low, extremely low. We're at the lowest point by far since this chart goes back to 2018. So, this is unsustainable. It's unsustainable. In particular with the triple Qs, because the triple Qs on the week last week, while they closed up, they closed well off the highs of the week. They're very extended. We have a short position on here, and we're looking for a pullback on the triple Qs. We're not looking for a crash, but we're looking for a pullback. And we did add to our short position on Friday. I don't know what this is. I love him as an actor. I can't stand his politics. Okay. All right. So I got to be honest with you. Logging on tonight, I had hoped to see the dollar up, gold up, and bonds up. Gold is down, dollar up, bonds down. So this weekend, as a matter of fact, I closed that out. Damn it. Did I repost it? I don't think I did. Damn it. There was a tweet I had up about a about a U.S. drone. So let me just begin here. I'm getting ahead of myself. So, children among mass casualties after U.S. supplied missile targets crowded Crimean beach. This is horrific. This is horrific. I don't care what side of the argument you're on. You got kids that are dying. That's ridiculous. So, the tweet that I had up, which oddly enough is now gone, I'm seeing Rob Reiner's face, was that the missile was being guided by a U.S. U.S. Controlled drone. They guided that missile into Russia, supposedly. I don't know it to be a fact. So more to come on this, but this is a potential act of war. And I'm very surprised to see the dollar's not up along with gold. Usually that's what happens when you have geopolitical risk on. To me, this is risk on. If that's true, that we had a drone that piloted a missile, guided a missile into sovereign territory of Russia, that's an act of war. Terrible. And when we talk about the United States and the trajectory that we are on, it is just spectacularly sad. And this is just indicative of the path that we are going down. And how does this relate to the equity markets? It relates a lot to the equity markets. The fact that you have the Gulf of Aden, the Red Sea shut down for shipping. That means that the Suez Canal cannot be appropriately be used. That means that all shipping must go around the Cape of Good Hope. If you're Lloyd's of London, you are not insuring ships going through these channels. So what does that mean? It means that those ships had to go around the coast of Africa, the southern tip of South Africa, and come up the opposite side. We have been unable for the past, year and a half now, to put this to an end. We have the largest military in the world, by far the largest defense budget, yet we can't get control of terrorists that have shut down the Red Sea. What does that tell you? So, 2 distress calls. UK Navy reports abandoned ship in the Gulf of Aden. 2 kamikaze drones attacked in Red Sea. Add to that, we are now in retreat out of that area. This is the United States of America. U.S. withdraws aircraft carrier Eisenhower from Red Sea amid stepped-up Houthi attacks. You've got to be kidding me. The signals that this sends to the world that we can't get this area under control is mind-boggling. Mind-boggling. So the geopolitical risk continues to get ramped up here. In particular, Ukraine is now being gifted with F-16 fighter jets. They've attacked radar systems inside of Russia, and they're now gaining potential air superiority in certain areas of that region. If that happens, this war gets a lot hotter, a lot quicker. So much for peace. Okay, let's take a look at comments. Metal, did you mean attack or attach? Attack. Attack. Wheat selling off and Bitcoin has no support, by the way, by what I see. Yeah, Bitcoin's been pulling in a little bit. Yeah. It's got support, but we're right at it right now. There's support down there. There is. I still think that we're looking at a bullish pattern here. We have you want to call it a cup with handle, a saucer with handle pattern. Granted, it's nowhere near as bullish as it was back here. We had a failed breakout, but still bullish on Bitcoin. NVIDIA and QQQ and HPE all have 2 candlesticks for 2 red. Okay. Bob, Six Flags will pay a special dividend of $1.53 per share. This dividend is payable on July the 1st. Okay, so they probably went ex-dividend on this already, Franklin? That's a big dividend. That's a big dividend. That's probably the one-time probably dividend. I think it would have to be given the share price. Okay, let's thanks for that, Franklin. Let's talk about stocks that we like going into the new trading week. Google, Alphabet. What happened here? Okay, Google. I'm going with Google. Weekly chart, a really, really beautiful consolidation here. We had a new closing higher high last week. I think Google is moving up higher. Daily view, we're stuck in a bit of a resistance zone. However, we have strong support below, and it's hard to see here. Let me see if I could change these lines a bit. All right, in orange, let me see if I can thicken these up a little bit. All right, better. So in green, you have the Keltner channels. In orange, you have the Bollinger Bands, and they're beginning to squeeze now. All this energy that's been concentrated in this zone for now going on 2 months, it's ready to get released. We are trading above the moving averages. Therefore, the path of least resistance for this is to the upside. Very bullish on Alphabet, GOGL. Tesla, we own it. We traded it, made a profit, got out, got back in, stopped out, back in on Friday afternoon. Why? Bullish key reversal bar, and for the same reason that we like Google. However, the relative strength of Google is far better than that of Tesla, meaning relative strength, not RSI, but relative strength versus the S&P 500. While Tesla's beginning to improve a little bit, it's still a laggard on relative strength. So do I think that we're breaking out here? Yes, I do. We've been in this trading range for now. Same deal, about 2 months. And it looks as though this is going to get resolved to the upside. I think that if we get a breakout above the highs of June the 13th, we're going a lot higher on Tesla. I may be putting on a call spread on either Tesla, Google, or Palo Alto Networks. I already own the common stock on Tesla. It may just be Palo Alto or Google because they have the relative strength. And I'm going to buy options. I want my best edge possible. So relative strength is key. And again, not RSI, but relative strength versus the rest of the market. Palo Alto Networks. Same deal here. We have a very, very nice setup. We broke out above this fractal resistance level. And while we don't have a squeeze per se on a daily chart, I'm still loving the setup here nonetheless. We have moving average, which are rising. We had an outside reversal bar, not quite an outside reversal bar, but close enough on Friday to get me more bullish. We stopped out here on Palo Alto. I'm probably going to be looking to get back in. Weekly chart. Really, really nice stuff here. Good stuff. Oh, you know why this is not looking right? This is set to 3 standard deviations. That's why. Let's go back to that daily chart. Still not showing there. Google clearly is showing it. So you have a 3 standard deviation squeeze setting up on Google. That's huge. I'm probably going to go Google. Let's go REGN. Regeneron. Let's go weekly view first. We're at resistance here. You have a very, very strong resistance level. Folks, we're using TrendSpider, automated technical analysis. We have a link. If you're watching this on Twitter, above, and we have another link. As a matter of fact, I could pop it up here. There you go. 35% discount code. 35CON is our discount code. And there's a link below if you're watching this on YouTube, automated technical analysis. So we're at weekly resistance. I would not be a buyer here. Great volume last week. I just wouldn't be a buyer here. You're buying into resistance. Daily view. Good breakout. We're holding it. Might we continue up higher? Sure. To initiate a new trade here, not for me. If I were long and I wanted to keep long as an investment, I would be a seller of calls right here, right now on it, because the weekly chart, we're right at that resistance level. Monthly view looks good. Good looking chart. But just that weekly resistance level is haunting me right now. I would just be careful. If you're looking to initiate a trade here, think about selling puts as an alternative. You could reduce your basis cost if they're assigned to you. But I would not be a buyer here. No way. Amazon. Amazon looking the bomb here. Looking really, really good. You have a weekly squeeze setting up. You have both Bollinger Bands inside the Keltner channels in green. Let's set up an alert to see whether or not we get a retest back down to support. Ugh. I can't type on an angle. Retest. There you go. All right. That's good. 10 days should be good. We're happy. Amazon looking good. Momentum hooking up. Great consolidation here. We've been consolidating on Amazon since February, January. Looking really good here. Amazon looks like it's breaking out. Daily view. It broke out on a daily time frame on Friday. I did not draw this breakout point. That is the automated trend lines. Click of a button. And there you have it. So Amazon, very, very bullish on Amazon. I like it. Consumer discretionary names, they're all doing well. I mean, very, very strong sector last week. And Amazon is a part of that sector. Look at the breakout here on consumer discretionary of all areas. The consumer's broke, yet this area is breaking out. Go figure. GoPro, GPRO. Let's go monthly chart first. Ooh. Well, it's now or never for GoPro. I would first check the short interest. My guess is that it's heavily shorted. In fact, I'm curious. What the hell happened? You got to be kidding me. I'll try that again. Now the third time. Okay. Statistics. So, well, you only have, I'm very surprised that you only have about 7 million shares held short. But the upside is that you have a 3-month average moving volume of about 2 million. So that gives us about 3.5 days worth of a short squeeze. If that occurs, cash and debt, where are we at with cash? Debt is crazy, but it's serviceable. Beta, which is a measure of volatility, very, very high. So that's actually a good thing. So this is a unsustainable downtrend. In fact, I would argue that we're inside of a descending wedge formation. I think this gets resolved up. You have a volume shelf at $1.33. Where do we close out the session on Friday? $1.37. I think this is going to be a short squeeze. Weekly view. You do not want to see it close down the month below $1.30 per share. If it does that, you got to avoid it like the plague. That means it's sick and getting sicker. But right now, it's looking interesting as a trade only. Daily chart. They're trying to rally it. You've had the first thing I always teach members is that when you're looking to buy a stock that's in a bear market, rule number one, before you buy it, it must stop going down first. Has to stop going down. Has that happened? Well, looking at it from a short-term view, daily chart, yeah, it has. And when that's happened before, like back here, you got a rip. So it looks as though we're setting up for a rip here on GoPro. Very, very short-term swing trade, and I would be out. CrowdStrike. Weekly chart. I'm not a buyer here of CrowdStrike. Overhead supply, way too much of it. I'd be a seller of calls here. Just beware of earnings. You don't want to be long or short of those calls into earnings. I would not be a buyer of the common stock. If I own the common stock, I would definitely be selling covered calls here. Look at the volume distribution last week on CrowdStrike, daily view. It's stalled out, rolling over. I'm not a buyer here. I would sell puts if I'm bullish. Right now, as a call seller, this would be a good candidate to sell a strangle or a very wide synthetic iron condor. So that's what I would do here for cash flow. I think we're just going to go range bound for a while on CrowdStrike into earnings. What else do we have? Kelly, BRKB. Why is this not coming up for me? BRK. Here we go. .B. So it's been in the consolidation for quite a while now. And it's a mixture of finance, consumer discretionary, and a little bit of consumer staples. I'm bullish on it. I think it's breaking out. What the vibe I get, and I shared with members on the weekend commentary, the vibe I got from looking at the charts of QQQ, XLK, SMH. Those have been the leadership names of late. those look toppy. Even though my 3 favorite picks this week are all high-tech stocks. Well, they're not high-tech stocks. Amazon's consumer discretionary. Tesla is consumer discretionary / tech. And Google is communications. So it's not in the semiconductor space. I think that's going to pause. I think we're going to see a rotation out of semis, out of high tech, into more consumer discretionary, more into the Dow names. Dow closed better last week than the S&P 500 and the triple Qs. So I think that Berkshire is well positioned for this bit of rotation into different names. So I like the weekly chart. It's consolidating. I have zero problem accumulating here, then adding more on the breakout. And we do have a bit of a Bollinger Band squeeze setting up. Bollinger Bands in orange, inside the Keltner channels in green. That's very, very nice. Daily view. We have the same setting up. What color do I have here? These are not matching. My OCD is kicking in. There we go. Okay, better. Woo! All right. So even on a daily chart, we have a Bollinger Band squeeze, Bollinger Bands in orange, inside the Keltner channels in green. The only problem here is that we're just barely above the moving averages. We have what, the 21 period here? '20 period. We're just above it, barely holding on. You need to be stacked. You need to have all your moving averages moving up and the share price above those moving averages. We're there, but just barely. So ultimately, I think this gets resolved to the upside. I'm bullish on it. Should we trade DI? I like DIA. I mean, yeah, I've been touting it all night that last week the Dow Jones did better than the Qs, did better than the S&P 500. We do have some, this is a weekly chart, DIA, weekly chart, and we have some resistance above. And this is the beauty of TrendSpider, folks. I can't remember, and I don't want to draw all these resistance levels and support levels. So click of a button, there you have it. 35% discount code below. And now they have a new feature. I don't know if anybody's familiar with Spot Gamma. I haven't played with this yet, but this is an indicator. I'm going to be learning more and doing a segment on it about how you're going to watch options flow manipulate share price. So the way it works with Spot Gamma, this is a separate service, but it's now integrated with TrendSpider. And the way it works, and I've never seen it work on a daily chart, only intraday with Spot Gamma. I subscribed to it for a while. I canceled it. Now, what the market makers need to do is, suppose you're a call seller or you're a call buyer. Well, they need to go out. They need to fill your order, but they need to hedge that position now. And they need to sell short equivalent common stock. So that way they're hedged and they don't get burned. So that tool helps identify potential moves in the share price as measured by the options market. And now this is now incorporated into TrendSpider. They keep doing stuff that's just amazing here. So once I learn more, I will illustrate it. I just learned this yesterday. "15-minute view, not seeing much here. But getting back to the analysis of the DIA, yeah, we have resistance above. I think we're breaking out. Now, can I be wrong? No, I wouldn't be the first time I'm wrong. Here's your wedge formation. We break down below this lower band of support, you stop out. If I initiated a position, it would be no more than 20% of my intended allotment. Once we break out above this upper band of resistance, I'd add more. Let's just set up, and I want to know if we break support. All right, we're good. Bob, have you used option strat? I have not. I have not. Option strat, is that something similar to what's it called again? Spot gamma? All right. We'll leave it off with we'll go over two more stocks. Nvidia for the lovely Jody. I am bearish on Nvidia. We had a bearish reversal week last week. I think it's going to take a pause. We were down on volume, daily chart. We broke daily support. I think that we could bob around here, but I think that we're overbought on a weekly, monthly time frame, and that we need to correct here on Nvidia. It's been a long time since we've seen a massive correction. The last time stochastics were down below 20 was back in April of last year. Excuse me, April of this year. I'm sorry, April of this year. Last one up. DBI, Designer Brands. I do not know this company. Monthly chart. Very bearish price actions, flirting with support. Maybe it holds, maybe it doesn't. This is not something I would entertain as a buy right now, unless the weekly chart sways me. Definitely not. You know, it was a bullish week last week, but the only hope that you have here is that we rally up to, what, $8 a share. I mean, it's really not worth my time. Daily chart, I would avoid this. There's so many other better plays out there. Why bother with this? Sean, have a great night, my friend. Folks, thanks for being here. Don't forget about Trendspire, 35% discount code. Don't forget about the survey coming out soon. Thanks for being here. Like, subscribe. You know the deal. And everybody have a profitable trading week. I will talk to you throughout the week. Be well.